Let's go, man. We be partying over here. I don't know about party, but that's a groove. I like my grooves, man. I'm smooth. I like listening to that music in the background. Keeps me flowing throughout the day. I don't know about you, man, but I like to get into a zone whenever I'm doing something. And that music, man, that music just helps me stay in the zone to get things done. Welcome, everybody. Happy Monday. Good to be with you. And we are live Monday night. Exciting conversation that we're about to get in. I was actually sitting here and thinking about you guys, but also thinking about specific people that we've had conversations with over the last week. And I'm always thinking about how is it that we can serve. Grade eight, good to be with you, man. All right, so I see you over there in the YouTube channel, and I'm always thinking about how is it that we can serve the people that we work with. What is the thing that's going to make the most difference? And I see like a lot of the pains, a lot of the things that people deal with in these areas that we discuss. And I know, man, without a doubt that we can deliver something that will give you access to peace, ease, and clarity. But more so than that, results in your business, which means that you go out here and you feel as though that all the effort, all the work that you're putting in is delivering that outcome of you having more money in the bank, you having a greater peace of mind, you having a legacy, you creating wealth for your family, and all down the line. I definitely believe that the things that we share here will give you access to that. One of the things that I was thinking about before this call was, somebody that we work with, a trucking company, as a dump truck company. They own a dump truck company out in North Carolina, and it's just solopreneur, man, the solopreneur. How do we help the solopreneur? You know, you guys are working the most out of anybody in terms of just putting all the pieces together in your business because you don't have enough help and you have to wear all these hats all across the board. And there's some deficiencies that I saw in how he was delivering the administrative part of the business, the bookkeeping aspect of the business. He's not doing poorly per se, but the small things that are off inside of what he's doing is just killing him. When I say killing him, he was doing things in a way where it showed his income being more so than what it actually was for 2023. And guys, you know what that means, right? When you show more income for no reason, you're going to pay more in taxes. And you don't want to do that. You don't want to pay more in taxes than you have to pay. His situation was that, because of bookkeeping errors, he's filing his taxes. He's about to file in a way where he's going to spend an additional $16,000 in taxes for a solopreneur, right? That's a huge deal. Like when you just by yourself and you're not that large yet, $16,000 of an additional tax bill that you don't have to pay is huge. And it's all coming from clerical errors, you know? And you don't have to do that. You can actually, the one thing that I believe that will be beneficial for each and everybody who's in business for themselves, especially at that stage, is to have somebody like an expert that can go over their stuff, all of their financials and their administrative processes, their bookkeeping. Somebody who has a high degree of integrity too, right? That does exactly what they say they're going to do. Because one of the things I think that people get discouraged by. I know, man. I'm talking about all kinds of other stuff before we get started with this conversation tonight. But it's important that we talk about the things that matter. It really is important that we talk about the things that matter to you. I think a lot of people deal with not being able to trust the people that they hire to get the job done. I know I've dealt with that. I've dealt with that a lot in my entrepreneurship journey, which is why I am where I am today with it because I had to be the one. I had to be the one to accomplish to do all these things inside of business to a high level, to a high degree, and with that integrity, absolute integrity, which means if I have something that I say I'm going to do, I'm actually going to go out here and do it. Okay, 100%, not just a little bit. If it's not 100%, then it's just not done. Is what it is. You know, and I think that's what a lot of people deal with: the fear of going out there and trusting this part of their business or any part of the business for that respect to somebody that they don't know is going to get the job done 100%. And you want to have the people that you can confide in, the people that you can trust to do that job with you and for you. And you really want to have the result on the other end, which means that you're looking at the absolute truth in your financial reporting so that you can make really good decisions, especially some of the decisions that we're going to talk about today. when it comes to, okay, how much do I pay myself to make sure that I'm going to, maximize my retirement account and reduce the overall amount of federal income tax exposure that I have if I have the right business structure, and then continue to create other strategies where I can shift income to other things and other people, right? So that it's not impacting you tax-wise as significantly as what it is. But if you're working with numbers that aren't the truth, well, then the actions aren't going to line up, right? You're not really going to have the actions line up to be the ones that will deliver you the result that you're looking to get, right? You'll have a situation where you're going to pay more than necessary, like this guy, Fortunately, he hasn't really filed yet, which is another thing. He has to pay a penalty because he hasn't figured it out yet to file before the extension deadline. But even with that, he has to go back and make sure everything gets done right this time around, which is the extra time, the extra headache, and the confusion. And those are other things in addition to that you guys go through that you don't have to necessarily when you have the right partners in place. Okay. And if you don't have the right partners in place and you figure you want to take it on like what I did, then just go the full distance to understand exactly what it is that you need to do so you can do it 100% with integrity so that the job gets done. Not 70%, not 80%, not even 90%, but 100% complete in what it is that you're doing, what you're up to. All right. Hopefully that makes sense, guys, because I really do feel it when I'm listening to people every single day and the things that they go through in these areas that can cause great confusion, great stress, and at the end of the day, the frustration because the outcomes aren't lining up. And it's taking so much time to do it, and it's still not working the way that you want it to work. I don't want you to suffer in that way. I want you to make sure that you do everything possible to alleviate the stress and the suffering so that you can have just outcomes, and a high level of peace of mind in the process. Hopefully that makes sense, guys. If you're with me in this conversation today, you don't know who I am, let's go, man. Let's get into this conversation. Let's go. All right. So this is me, Cheston Bulgin, trucking CFO, tax strategist, your accounting superhero. I founded a company called By the Bush Consulting that deals with the areas that I was just talking about, okay, and more so in terms of tax strategy, tax planning, and business systems, especially trucking, fleet management systems is what we want to call that. So that's what we do here. You can connect with us at 888-4BTB now. That's 888-428-2669. We have an excellent team over here that really is excited about delivering the promises. Okay, the promises, peace, ease, and clarity for you. Okay, so anybody you get to speak with over here, they're excited to speak with you and help you. Okay, youraccountingsuperhero.com, that's the domain, and you can reach me at cbulgin at youraccountingsuperhero.com. Follow me on Instagram, guys, at youraccountingsuperhero as well. You want to follow me on Instagram at youraccountingsuperhero. We cut these videos and make shorts out of these videos, but I'm also delivering some live content as I come up with things that people deal with that may help you out, and it can be concise down, like chunked down to 60 seconds, where you can be on there for 60 seconds. Say, man, I didn't know that. Now I know this. Let me go out here and crush it because I know this now. Okay, so that's why you want to follow me on Instagram. Okay, at Your Accounting Superhero. Also, there is this community that we have. It's Truck Profit Academy. It is free for another just under 60 days. Okay, you have under 60 days to join for free. After that, it's going to be a paid membership come January 1st. We'll be delivering the pricing for that in December, what that's going to cost to be a member of the Truck Profit Academy. We've actually sent out the surveys for those of you who are already in the Truck Profit Academy. We've sent out the surveys for the mastermind that's coming up so that we can have an iron sharpens iron experience inside of this. Okay, so that's the Truck Profit Academy. If you want to join that, you can go to truckprofitacademy.com and get signed up right now for free. You get access to content like this and more. The community, you can reach out to me, chat directly with me for specific things. It's an open community, man, right now, designed for you in the trucking industry to level up wherever you may be. There's an evolution that you may want inside of your business, and we're there to help along with that evolution. Okay, truckprofitacademy.com. Also, we're still doing this free profit and cash flow analysis. You can sign up for this now by going to youraccountingsuperhero.com/book-and-appointment. The idea is to stop wasting time and increase profits and cash flow as soon as today. All right, let's go, guys. There's a quick disclaimer before we get started. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and/or legal professional for specific advice. All right, man, here we go, man. We are getting into this fantastic conversation today. It's the end of the year, really last quarter of the year. So there's some things that you may want to put into existence and now, sooner than later, to make sure that you win in 2024 all the way down through the tape. You know, if we're running this race through the end of the year, consider this, that you get to run all the way through the tape, all right, for the 2024, which means we finish the year strong. We have something that we do every week at our company. We call it a Finish Strong Friday. And the concept of that is that, you know, some people are thinking about the weekend and they're checking out and, they don't want to do anything on a Friday. And their brain is checked out on that Friday because they're already thinking about, man, what all the wonderful things I can do tomorrow on the weekend. You know, they already have the plans. Even the night, they have plans that night. But at our company, we get to focus on a Friday because there are some things that we can do to finish the week strong. We have promises to keep. And, you know, in order to get the results out of our own culture and the people that we serve, I have it that there's an obligation and also an excitement to finish the Friday strong, finish the week strong. That means we run through the tape. We give it everything that we got to finish off the entire process for that week. Whatever targets we're looking to hit, whatever objectives we're looking to accomplish, we get to accomplish those on a Friday. Now, I'm bringing this to our conversation because I want this mindset to be your mindset for the year of 2024. I want you to have this mindset for 2024. How are you going to finish the year strong? That's what this conversation is about. You being able to finish out 24 with everything you've got. You have no regrets inside of your business, and you're able to take advantage of a lot of the strategies that we've been taking advantage of, we've been talking about rather, in these conversations that we've had together. But if not all of them, at least one strategy, one thing that you've been able to give everything you've got to so that you can have that shift in your business in a way where you accomplish that new level of freedom, wealth, and or legacy in your trucking business and beyond, okay? So that's what that's about. These year-end strategies are here and designed. They're here and they're designed for you to finish the year strong, okay? Hopefully that makes sense, guys. Now, today's conversation is about, number one, paying yourself, all right? So we talked about this a little bit this year. I'm going to talk about it a little bit more to really drive it home. So the difference today when it comes to talking about what it looks like to pay yourself as the business owner of your company. All right, what does it look like to pay yourself as the business owner of your company? And how can you do it in a way where you're setting yourself up for keeping your hard-earned money in your pocket, right? When it comes to taxes, and knowing that you're doing things in a way that's compliant, you're above reproach when it comes to this. How do you do this? Okay. Now, it depends on your business structure, number one. And for those of you who are not really familiar with our talks about business structures and how to pay yourself through specific business structures, please go back into our library on YouTube to check out those videos. For those of you who are in this conversation today, I want to point out, you know, there are two main ways to pay yourself as a business owner. So W-2 wage. Now, if you own an S Corp or a C Corp, you know, I don't want to get too much into C Corps just now, but mainly I want to focus on S Corps because there's a reasonable compensation clause with having an S Corp, which means legally, compliance-wise, you have to pay yourself to be compliant with the S Corp. So that means a W-2 wage. W-2 wage. You have to do this with an S Corp. So you can pay a paycheck through payroll, which means taxes come out. You know, your FICA, Social Security, Medicare comes out of your paycheck. Federal income tax comes out of your paycheck. This is for you, all right, if you're an S Corp, okay? Now, we want to leverage this inside of your S Corp to make sure that when you pay yourself, you are maximizing deductions at the same time. You get a deductible expense for your business, which reduces the business income, and that business income is your personal income as well. S Corp is a pass-through, okay? And at the same time, while you're paying yourself a wage, instead of that just transferring to the wage income, we can do it in a way where we can maximize retirement, right? Pay yourself, pay yourself a wage, but then reduce that income that you get paid in your wage by maximizing your retirement, right? So that you don't have that high federal income tax liability. So what do I mean by that? Well, I mean, well, if you pay yourself a wage and you're using, like, you've set yourself up with a 401k for your business, and you know that you can contribute up to 69,000 total with that 401k. And if you're you at most you can pay in 2024, I believe is $23,000 that you can deduct from that wage, right? So you can actually pay yourself, let's say, for example, let's write this down. Let's say you pay yourself 40K, okay, $40,000. In W-2 wage or your S corp. It's going to be on the fly, guys, so my math might be a little general here. Okay, just to prepare you. Okay, let's say you pay yourself $40,000 in W-2 wages in your S corp. Okay, and you decide to max out how much you can pay in retirement through this. Okay, now for one, this is a $40,000 deduction that your business has because it's paying you in these wages. Okay, yeah, it's a bump up in your personal income, but then we get to bump it down by taking away the 23,000 that you can put into the 401k contribution. Defer that now. So it's not like you're getting paid the 40,000 fully there, right? Because 23,000 of that goes to retirement. So let's say you do that, right? So minus the 23,000. Well, now that's a deduction that your business took and a deduction from you personally as well, the 23,000, right? So now you only get paid 17,000 gross wages, right? So you just reduced your income $23,000 right there by contributing that to retirement. But then on the other side, well, there's room there for your business to contribute as well. Well, let's say your business contributes another 40,000. Well, now you just reduced your income tax. So business contributes. Let's say your business contributes 60,000. This is make sure we go into this because we want to look at how much you're able to contribute in terms of total wages. Total wages. You're only allowed to contribute up to 25% of the wages. So let me make it a realistic example. Okay. So if you paid yourself 40,000, then the next thing you could do here is pay 25% of that, which is another 10,000 contribution. Okay. All right. So now you've actually reduced your income by 30,000 by paying yourself through a W-2 wage. Okay. Right. So get this. Now, if you reduce that income and you're in a tax bracket, let's say you're just in a modest tax bracket of 22%, right? 22% tax bracket. And it's 33,000 that you're saving. Well, that's $7,200 that you don't have to pay in taxes that you would have paid otherwise. Why not keep that money? Okay, why not keep that money? Now get this too, that when you do this, guys, you're moving money from your right pocket to your left pocket at the same time. We talked about this last week, moving money from your right pocket to your left pocket. Okay. Now, the fantastic part about this is that the only thing that you're doing is just being smart with how you're keeping your money in your pocket. That is it, okay, in this strategy with paying yourself. Now, the other way that we want to talk about, I'm hoping, before I move on from that, guys, I'm hoping that lands, like that you get that you're moving money from your right pocket to your left pocket, and because of it, you get to keep an extra $7,200. in tax money. You have to pay taxes on you reduce your tax liability by $7,200 in this scenario, this example. Okay, simple, real simple. Okay, now the other thing is you might be thinking, well, I may need that money. I need that money to operate, to use in my life. How would I pay myself if I only pay myself 40,000, and then out of that 40,000, I'm putting the 23,000 away in retirement, and then I'm taking another 10,000 of business money and putting it into retirement as well. Well, how can I actually get money that I can live on? Well, a lot of people that I speak with don't understand how distributions or draws work in the business. These are not taxable, okay? But this is money you get to extract from your business up to the amount of profits and equity that you have in the business. Okay, so you can take out money from your business as long as you have that amount of money in it in terms of equity or profits or combination of the both. Okay, and it's not taxed. Okay, the profits of the business are, but the distributions aren't. So you can take that money out of it to pay for your personal expenses. Is what you can do. Okay, so these are the two ways that you're going to pay yourself, but you want to have. We talked about creating something called a science and an art to paying ourselves. Because number one, we want to reduce our overall tax exposure, but on number two, we want to make sure you have everything that you need when it comes to living. Okay, yeah, that is gold, man. It's pretty awesome, right? To make sure that we're creating the science and the art of this together. So move your money from your right pocket to your left pocket so you get to keep it. All right. And make sure that when you put these strategies together, as you work with somebody closely to see how you could actually implement this. It's great to have these ideas and concepts, but what's more profound is to have the execution strategy that actually works. Okay. We want to do that. We want to have the execution strategy that works in the process. In order to do that, you want to get with somebody who's actually pretty good at putting this together. All right. That's what I want to say about that. All right. So you want to lower your federal income tax liability through this strategy of paying yourself. Okay. It alleviates a lot of the tax burden without really having to do a whole lot in return in terms of actions. All you're doing is moving money from your right pocket to your left pocket. That's it. Okay. Now, the other thing is, we want to talk about today, the real meat of the conversation is how to keep your hard-earned money through structures. And the main structure we want to talk about in this is what we call a family management company. Family management company, FMC. Now, what is this? Basically, a family management company is a separate business entity that's designed to manage the family's assets. Okay. Now, it can be family business as well. It can help manage that. Okay. It can contract with other family members or family-owned businesses to perform financial management and financial advisory services. Okay. This could also be what we call a holding company. Now, there are different schools of thought when it comes to this, like the holding company is a family management company, and it does all these things with the assets of the company. Some people do that in their strategy. Now, the other way is for this family management company to be solely a simple, like a separate entity without any subsidiaries, like what a holding company would do is have some subsidiary companies that it would own. But it can be an entity that operates in and of itself, separate from that, so that it provides services for the other businesses and other family members. Still owned by the same ownership, but it has a distinct purpose when it comes to managing assets. But why would you want to do this? Did you know that you can't pay your children if you have an S corp and get the benefits, same benefits that you would have if you had an LLC? So like a single member LLC that's not taxed as an S corp. Did you know this? Okay, because if you have an S corp and you pay your kid, that kid needs to go on payroll. And if you go on payroll, well, then they have to pay the FICA taxes, right? They have to report, Social Security, Medicare taxes. And if you pay your kid through a single member LLC or even a partnership that's an LLC, then that paycheck that you give your kid doesn't have to be reported and written underneath payroll. It could just be a check that you cut your kid, and it wants to be compliant with all the actual follow through, right, in terms of the process. But you don't. The bottom line is that you don't have to report that on a W-2 wage up until the standard deduction for the year. Okay, pretty cool, pretty fantastic. So what happens is a lot of the times we create this family management company for the purpose of being able to pay our children. Pretty cool. The children can work in the company, help out, perform the task. They can learn a lot about business, like especially if you have them in your trucking company, they're learning the ropes. You can have them manage certain parts of the business through this family management company and have them get paid and reduce your overall tax liability. Okay. Now, there are so many other services that can be performed when we talk about asset management, like um, deciding on when to purchase equipment. They could help make those decisions. They can source out different suppliers, vendors that sell equipment or um, provide maintenance services. Any aspect of managing like family assets or businesses, they can actually perform those services, and that management company gets a fee for it. Okay, but why would you want to do that? Number one, we talked about being able to reduce your income through paying your kids. That's one major strategy that you could use in a family management company. But what else? What else can I do? Okay, let's talk about it. Okay, income shifting. Income shifting is a strategy we talked about before, and this company can be a really good vehicle for income shifting, which means that we shift income from somebody with a higher tax bracket in your family to somebody with a lower tax bracket in your family, depending on who's going to be the person who manages the family management company, right? So think about it. Who do you have like that you're already working with and providing a support to? This could be your retired parent, you know, and they're on a lower income, like a fixed income, and their tax bracket is like 10%, 12%, and you're already giving them support in other ways, right? And now you can actually go ahead and give them that support in a way where it's reducing your overall tax liability as a consequence of that. But now they get to be somebody who helps manage and run the business as well. And some of y'all are like, man, yeah, they're in that situation, but my mama's lazy. She's not going to help me run my business, man. So give me some other options, Cheston. Right, right. Because sometimes that could be the case where your family members are not what you would expect them to be when it comes to managing your company. But what I want you to get in this part of our conversation is the idea that you can be creative and start thinking your way through this to say, I'm already doing this stuff. I'm already doing this. I'm already expensing out, my resources to help out, support people in my family. How can I do this in a way where I'm going to reap the tax benefits of it? Hopefully that makes sense. Okay, because some of you have support that you're giving out to relatives and family members and even friends, right? And um, you're not getting the benefit of it tax wise, right? You're not getting the benefit of it tax wise. But this is something that you can actually provide to the people in your life, benefit them financially, reduce your overall tax liability because you're already spending the money anyway, but now you get the tax benefit of it inside of this structure. Hopefully that makes sense. Now I want to talk to you a little bit, show you a little bit about what this will look like. Okay, I'm going to show you what this will look like inside of a structure, how you can build this out for yourself. All right, I'm going to show you this diagram, guys. I want you to pay attention to this. Before I get into that, all right, we're going to take a few minutes to talk about something else. Some more benefits of this. All right, I want to make sure that this is clear before we move on. Now, here are some of the main benefits of starting a family management company. Here's a tax benefit. We talked about how you can hire children, and we have that, when you have to report the W-2 wages under S Corp. But if you have a family management company, you can pay the family management company, and the family management company can pay the kids. Getting the deduction, getting a tax deduction for paying your kids, for actually performing services inside of that business, right? There's also a way that you can take advantage of something we call the Augusta rule. All right. So there are, meetings that you can hold throughout the year, and, you can actually rent out the home office or the home space at a reasonable market rate hotel fee, like how much you would spend at a hotel in any area in your market for that night, you can actually rent out your home to your business, right? For those purposes, those meetings. Like especially if it's a family management company, you have people coming from all over to meet there, you can actually get compensated for that, right? As somebody who's renting out their home, getting that deduction from the business expense, and not having to report that as income up to the limitations for that particular rental fee for the year. I believe it's right around $14,000. All right. Now get that. You can take advantage of that using this family management company. Pretty cool. Okay. Now the other thing that we want to talk about in terms of benefits are asset protection and asset management. All right. Now, the idea here is the benefit for asset management is, number one, having somebody who actually is pretty good or is willing to learn to be good at maneuvering and managing the assets of the family and of the business. Okay, this could be one of your kids. They could really learn a lot about how to manage the ins and outs of your family business. In this case, it's trucking company. What if you have real estate? It could manage properties. They can learn how to do that as well. Pretty cool to let them learn the ropes in terms of managing those different types of businesses. Pretty good skill set they can learn at a young age. It also gives you an opportunity to strengthen relationships if you know how to do that. Okay, some of y'all don't know how to do that, but you can learn how to really create that relationship newly in a way where they actually are built up in the process and learn the business in and out. Okay, and in terms of the structures that we want to put together, and this is where I really want to actually take this conversation to a new level, is having you really get the vision of what this could look like for you. All right, so what does that vision look like for you all the way around? Take a look. So what do we have here? So this is what your structure could look like for you having your operations and your family management company set up in a way where you can create this year-end strategy to keep more of your hard-earned money in your pocket and create a whole new level of asset protection. Okay. So I'll put a few things in here. We're going to talk about a couple of these other things at a later date, a later time. But what I want to leave you with is, how this management company flows from one aspect of your business to another aspect of your business. Now, if you look at the top here, this is you. Right below you, we have something called the trust. Now, the trust is here because it's designed to own everything, and you own nothing. Asset protection. That's why that's there. Okay? So we want to have this structure in place first. The trust is something that you can manage as a trustee, and it owns everything. You own nothing. Okay? So the trust owns your businesses, the trust owns your bank accounts, the trust owns all the assets. Okay? And then there are different layers that you can have in terms of protection at the business or entity level as well. Okay, so that's what this is designed for. Now, if you look on the left-hand side here, it says active businesses. This is where you have your trucking company, trucking operations. This is what this is. Now, as you get started, maybe you just have this trucking company and you're really looking to drive this forward and have success in your trucking company, start making money, be profitable, learn the ins and outs and run it efficiently and have higher performance, right? And then let's say you do that, you get to another level and you have a lot of equipment. Well, you want to start managing it in a way where you're going to, have your assets inside of your trucking company protected, which means that if anything happens, God forbid, in the trucking company, I'm listening to the radio, and who's that lady that's always on the radio talking about the like she's like the lawyer that sues trucking companies. a 1-800 like truck wreck or something like that. Like I keep listening to this commercial. I'm like, man, if I were out here running truck companies, I'd be like just like hating this lady because she's like almost coming after me all the time for any mistake that we make, right? But God forbid that you make one of those mistakes and that somebody would call 1-800 truck wreck and get this lady. So she comes after you. Well, there's going to be a limited the scope of what she can possibly sue for, right? There's not going to be much assets, not going to be that much in assets in the business to get to, right? But this is what this structure is designed to do, to make sure that you shift it from from being everything inside of the trucking company. Yeah, you say you can't think of her name either. Yeah, 1-800 truck wreck. That's the lady. That's the number. But this whole structure, we want to develop this in a way where we're not only just making sure we're keeping our hard-earned money in terms of taxes, but we're keeping our hard-earned money in terms of asset protection as well. So your family management company over here can help manage that, right? Say, hey, look, we want to actually establish another company where we can protect our assets. They could do something like, create an equipment leasing company, where all the equipment leasing company is a company that buys all the equipment and it owns all the equipment. So that, it has its own bank account as well. It has a certain amount in the bank account because it has a rental fee that the trucking company will pay this equipment leasing company for renting the equipment, for leasing the equipment. Well, the truck company of itself owns none of that, right? And then there's a deferment of income in terms of what's kept in a bank with this company. So one has absolutely nothing to do with the other, okay? Everything the trucking company does, separate from the equipment leasing company. Whatever the trucking company is at risk for, the equipment leasing company is not responsible for that, okay? But your family management company can be a structure here in which that's set up for it to manage this aspect of all businesses to make sure that everything is running like this, to where we're limiting the exposure to risk between entities. That's one thing that a family management company can be designed to do, right? Think about it, right? What are the possibilities now for you when it comes to strategically putting yourself in this position? There are other things that can come about because of this. On the right-hand side, we're looking at what we call passive businesses, okay? Passive businesses. Now, what is that? It means that it's a business that doesn't have to actively generate the income. It doesn't provide any services, but it's maybe income that's generated from rental real estate, right? Real estate holdings is income that's generated from maybe investments like stocks, or maybe in equity like art ETFs, like it's exchange traded funds or mutual funds, bonds. It's passive income streams. All right. That's what that's designed to do. It could be investments and retirement, things like that. It can be on the passive businesses that this family management company gets to oversee. And you can see here that each one of these parts of either side, whether it's on the active business side or the passive business side, each one of those gets to pay that management company a fee, right? And now, when the management company gets paid these management fees, yeah, that's income for them, but they actually get to have a whole new set of deductions that go along with running this business. Get that, right? So although money is being shifted to this management company, it's actually being reduced through all the fees that are associated, like expenses that are associated with running the family management company. Expenses that would not otherwise be available with just the trucking company, because the trucking company has its own set of ordinary and necessary expenses. Okay. And the equipment leasing company has its own set of ordinary and necessary business expenses. And then once it pays the management fee to this company, it reduces that in terms of income, like reduces taxable income when they pay this management fee, as well as the trucking company reduces taxable income when it pays this management fee. But then this has its own set of expenses, like paying your kids, like travel expenses, professional fees, right? Bank fees, and office expenses that normally they wouldn't have outside of the trucking business, a whole new set of office expenses. for this company, right? And we get to reduce your overall taxable exposure in the process, as well as bolster up and solidify your asset protection strategy. Look at this. Okay. So, guys, really what I want to leave you with in this conversation is a whole new world of possibility inside of creating this type of structure in the way that you do business as a trucking company. All right. That's what I want to bring to the conversation to you this week. And I want you to go out here and make sure that you are implementing this strategy. Now, how will we implement this? Do your background research, right? Do your background research. That's how you would implement this. Make sure that you're getting partnered up with people who can help you along the way with getting this put into place, right? Make sure that you do your homework, okay? Make sure you go out here and look at, the list of people in your family that could possibly be a part of this new venture. So before the end of the year, okay? So now you're going out here and you're creating something where you are winning in 2024 to another level than what you would have expected to win at without this strategy in place. Hopefully that makes sense, guys. Go out here and crush it by implementing the strategy. I've given you something. We're going to talk more. We're going to talk more about like layered organizational structure to how you get to live your life when it comes to building your trucking company. Yes, but your whole entire master plan when it comes to asset protection, tax strategy, freedom, wealth, and legacy. All right, this is an exciting conversation to be inside of, guys. What I want you to be left with is that you can win big when you play the game big. You can win big when you play the game big. And when I say play the game big, I mean understanding the strategies that you want to have in place, and then taking the action to execute. All right, guys, it's been great being with you today. Definitely leave a comment, a like, share if you're on YouTube. I will respond to your comments, by the way, guys. If you leave them in YouTube, it might not be today, but it will be responded to, okay? Make sure you follow me on Instagram, guys. It's been great being with you tonight. See you next week. Have a great rest of your week and talk soon. Take care.